In this presentation, we will be taking a look at bank feeds and how to add checks and cash outflows from the bank feed to the QuickBooks data to the QuickBooks system. Here we are. For more accounting information and accounting courses, visit our website at accountinginstruction.info. On the home page, we are in the sample file that QuickBooks provides. We've got the open windows open. You can open the open windows by going to the View tab and Open Windows List. We're now going to go to the bank feeds. So we're going to go to the bank feeds by selecting the banking drop-down. We're going to go to the bank feeds. And then I usually start off with the bank feeds center. So we'll go to the bank feeds center. We have our 3 accounts with the bank feeds in it. We're going to go to the second one, which is our checking account. And we've already downloaded the bank feeds now, and now we need to look at the transaction list. We need to allocate these items out. So we're going to go to the transaction list, and then we'll have these items. Now, we're going to be looking here at the payment items. So we've got these payment items that have happened, and we need to do something with them. We also have this one payment item down here that QuickBooks has already labeled as blue, rather than having it say, need your review. And that means that they've auto-matched it. So those are the two kind of things that can happen here. QuickBooks can figure out what it wants to do, automatically match the system, or it could have missing information in some way that we'll have to fill out. And that's what we want to make sure we do. As we do this more and more, we can set up rules and allow QuickBooks to memorize certain transactions. And in so doing, the next time it comes up, QuickBooks will be able to basically match it out, and the process should be easier and easier as we go through this process. So if we look, for example, at the payments here, we've got along the top, we've got the status, we need to review it. Blue, the orange, of course, means it needs our review, as opposed to blue in this case, meaning that QuickBooks has done something with it, has taken an action, and we can approve or disapprove of the action. So we've got the review, we've got the check. That's going to be the type of transaction that QuickBooks is going to use to enter this data. And note that the check may or may not mean it's an actual written check. QuickBooks might see it as an electronic deposit that it still kind of labels as a check. When it goes into the system, it's going to be labeled as a check. Even if you don't assign a check number to it, it's going to be an outflow, which will either be a check or typically a transfer within the QuickBooks system. We're going to have the date. Then we're going to have the check number, whether a check number applies or not. So if it has a check number, of course, that would be the major indication that we are talking about an actual check as opposed to an electronic transfer. In this case, we have download as an ATM withdrawal. So clearly this is not a check. This is an ATM withdrawal, which is in the system as basically a check type of transaction as opposed to a transfer. And then it doesn't know what account, and the class may be an optional field. So clearly, at the very least, we're going to have to add the account here. And then we have the payment, and of course it's not a deposit, and then we have our actions drop down. What do we want to do with this? Looking at our actions, we can either quick add. Now if we quick add here, it actually won't be able to do much because it doesn't even have an account. So if I tried to say quick add, it's going to say your transaction must have an account. So you can't just quick add it because it doesn't have this item here. If we do force the quick add, then QuickBooks will have to assign an account. So let's see what happens here by going to the banking dropdown and the use register. And then we're going to go to the checking account and we're going to say OK. Now this one's all the way at the top for some reason. That's the way their bank feeds sample is set up. So if we go all the way up, there's the 200, and notice it's given an indication by this little sign here, which says it came from the bank feed. Now, what it did then is it had to force an account here called uncategorized expense. So if we do that, if we don't know what expenses are there and we say, hey, just add it to my system, just do it, just add it, then you're going to have this uncategorized expense account that's going to have all this stuff in it, and probably you're going to have to go in there and reassign it in some way. We could do that, and that's not too difficult to do. We can go into this uncategorized expense and reassign it. But it's easier to do in the bank feeds when you first start the bank feeds, because then every time the bank feeds come in the future, it should automatically assign out to the account that you want it to go to. So for example, if it was an ATM withdrawals, we might say that this is draws or something like that. We might want a draws account or some other expense account. I'm going to call this shareholder distributions. If it's a sole proprietor, you might have draws. If it was an ATM and we took it out for personal use, if we took it out for business use, it could be some other account. But in any case, If we can label that account and have it be memorized within the bank feeds, we won't have to go back to the checking account or to the transactions within the system, within the income statement in this case, which will have an account called uncategorized expenses. So then we can record that and make that change. We're going to go back to the bank feeds here, back to the bank feeds in the open windows. Going to go back to our second account, and we want to see the transactions. Actually, the transactions are over here in the open windows as well. So then we have these two other payments. So here's a payment date, and we have the payment, and we have a check this time, but we don't have a payee or an account. So again, we can't really assign this out until we have those things. Now, hopefully, if you're in a bank that could have the checks there, they should be able to hopefully give you the payee with the check. If not, if the bank feeds are not giving the payee with the checks we're actually writing, then we can have the canceled checks would be helpful to do this, or it might even be better to do more and more of our work with electronic transfers so that we can it'll be easier for the banking system to put that data into the system and easier for us then to use the bank feeding option. So it might actually be better to have electronic rather than checks if using the bank feed in order for it to have the system be able to pick up as much information as possible and make it as easy for us to assign it as possible. So we're going to go here to the drop downs. We've got the quick add. We've got the add more details. We have select bill to mark as paid. So if one of these checks are related to a bill, the thing is we want to then make sure that we check it off to that bill. We don't want the bill outstanding. We'll take a look at that in a second. Match to an existing transaction. If there is an existing check out there, then we should match this out to it. We'll take a look at that in a second. Ignore is going to be something, for example, if we know that there's a duplicate. If we know that there's a duplicate transaction and for whatever reason QuickBooks isn't matching it up to that duplicate transaction, QuickBooks should be able to say, hey, I matched it. I know that this matches up something that you already have in the system. You've already written this check. And if we handwrite checks in the system, which is useful to do, actually use QuickBooks to print out the checks, then QuickBooks should be able to match them up. It should be able to see the check number and the amount, match up the check and say, hey, you already have this. We've matched it. We're not going to duplicate this transaction. Okay, so in this case, what we're going to do is we're going to add more details, which is going to be typically what we want to do, especially in the first month where this is what we're going to do. I have to do for a lot of transactions. We're going to say, I want more detail in the transaction. And we're going to say what we can do with it. So this is what they gave us. Date, it's a check type, and then they gave us the check number. We're going to have to find the payee. So I'm just going to pick a payee that we have. Let's see. Type of payee. Tom, we'll say the payees. And we're going to have a memo here, and we're going to say it's for repairs. So it's going to be repairs is the account that we will go to, the expense account that we'll go to. So we're going to say, hey, we found out, what this payment was for. If it was an actual check, then we can go through the cancel check and see who we paid and find the name of the person we paid, and then of course figure out what we paid that person for. That would be the account. In this case, repairs. We can put an amount. The memo would be good if we had one. The customer, bill, class, same type of information we would put in place when filling out an actual check. And so this is the minimum we need. Now we're going to say add to QuickBooks, and it's going to add it ready for approval. Now note that sometimes if these transactions can be verified from transaction to transaction, QuickBooks will ask us if we want to set a rule based on that transaction. Now this time QuickBooks didn't really have enough to do that because it only had basically the check number. So it didn't even know the name. So it doesn't really have enough to make a rule in that case. But if we go through transactions that are, especially electronic transactions, they'll have more activity in them, and we can basically typically have a rule, and QuickBooks will be able to match up or guess what we want to do more often. So in this check, let's take our drop down, and we need to add more detail. But what if this was a check that needs to be matched up to a bill? Let's see what that means. So to do that, we're going to go to the home page. So let's go to the home page, and this is a check for $850. So we'll go to the home page here, and we're going to enter a bill, like a bill that we need to be paying in the future. So we're going to say that we have a bill. We're going to enter the bill and we're going to say that the bill was to, let's just pick the first one. There's an open purchase order. That's okay. I'm just going to say no. And we'll go through. It's going to be an expense item. And we'll say that the expense will be, we're going to go with repairs again. And we're going to say this was, the bill happened on 11/05/03. And the amount is going to be, for the amount that our check is $850. And so there we have it. So here's a bill, and it's matching up. So if I save and close this, then we're going to say that bill then is going to be outstanding if we go to the bill pay. So it's something that we're going to have to pay here. There's the $850 bill and the bill payment. In other words, it's going to be in accounts payable. So I'm going to close this back out. Now if we go back to the transaction list in our open windows, and we look at this and we say, here's a check that we had, and if we determine that it's going to go to the same transaction and it's for that bill that we had entered, then we're going to have to go in there and allocate it to the bill. So in other words, we could go to this screen here and say that we want to select bill to mark as paid. So we'll select bill to mark as paid. It's going to be our vendor. So here's our vendor. So notice now we're getting a check. So what we're doing is we're saying, hey, here's a check. Is that check related to a bill that we have already entered into the system? And this one we're saying, yeah, we just entered the bill. Now within the bank feeds, we have this check that we're assigning to that bill. So we're going to say, there it is. And there's the check that we just wrote for the $850. So there's the check. And it says, okay, we matched it out now. So now we've matched this check to the bill, going through the normal payable process where we enter the bill, we write the check, and then of course the check is going to pay off the bill. So when we enter the bill, accounts payable goes up. When we write the check, accounts payable is going to go down, as well as cash going down, of course. And so now we've matched up this transaction, and we can say add to QuickBooks, and it'll match up the bill so that we can properly allocate this information and still be able to enter the bill within the system. Notice if we didn't do that, if we just wrote that check and we said that and wrote it to a service item, then of course we'd have the bill. We'd have two items in the service item. We would have one written there when we made the bill for $850, and another when we wrote the check for $850, doubling the expense. And we would have an outstanding accounts payable looking like we still owe that particular vendor because we never matched out the bill. And so those are just some things. Like, it just depends on how much we're using the QuickBooks system in order to enter the normal accounting process, just to make sure that we're matching this stuff out. If we were just taking all this information and not entering bills, then of course we wouldn't have that problem. We could just take this information and that's all we would have. We could basically just add it, and we would be more on a cash basis system. If on the other hand we are using all the other benefits of QuickBooks, such as the bills, such as entering invoices, we got to be very careful when we allocate this stuff out. Okay, so this one's a deposit. We have another check here. So we add the check, add more details, select mark. We can match to an existing transaction. So let's take a look at an example of that. We're going to go back to our checking account here. So we'll go back to our checking account, and we're going to enter a new transaction into our account here that will basically match up, and see if we can then match it up and see if QuickBooks will then find it and say, okay, this is the same transaction. So we're going to say as of 11/28/03. Oh, what happened? 11/28/03, and we're going to enter a transaction, and that's going to be the check number. Don't have a check number. I'm just going to delete the check number. We're going to put the payee is going to be the bank. So let's just put bank. And so we're going to say tab. And then the amount is going to match what we have here, which is just $9. And so then it opened up the split because that's what we had in a prior time when we entered something in the bank, apparently. So we're just going to call it bank service charge. So we have a bank service charge here, and the amount is $9. So this is just a normal transaction. We're going to say it's going to the bank. It's going to be $9, and it's a bank service charge. And what we're trying to do is put a transaction here and say, hey, how can we match this one up? It's a duplicate transaction. Now we already have it into the system. We need to match it up with what's in QuickBooks. So we'll record this and then go back to the transaction detail in the open windows. And see, then it automatically said, hey, I found that $9. That $9 is the bank service charge, and we matched it up, and it looks good. Okay, so if we go back to the checking account, and I scrolled all the way up to find that $9 again, because it's up here in 1128.03. And then if we delete it, I'm going to right click on it, on this check, and delete it again. You don't want to do this all the time in practice, of course, but we're just demonstrating here. So we'll delete this transaction, see what it does to our bank feeds again. So we'll go to the transaction list. And so now it's saying it didn't find it, right? So now we have that information. So that's how it matches it up. And that's basically what is happening with these two transactions. It said, hey, we matched it up, we found this transaction, and all we have to do is approve it there. So for this one, then, if we don't find the transaction, we'll select the drop down and we'll go to add more details, which is what you'll do most of the time. And we'll add more details, and then the payee is going to say, we call it the bank, and then we're going to say it's bank service charges and bank service charges. So it's going to be the activities, the bank service charges. We're going to call it bank service charges, and it'll record that decrease in the cash and record on the other side to the expense of bank service charges and add to QuickBooks. And so there we have that. And remember that if it has more detail, QuickBooks will often ask us, do you want me to add information, or do you want me to add a rule based on that and hopefully memorize it in the future? So it's now added and approved 3 items. We have 2 that we need that it matched up, and it matched to a transaction already in the system. So I'm going to just look at the check this time. If we agree with this matching, then we can just say, click that. If there are more than one, I can use the bulk item here. So I could select one by one, and we can match it. Or we can say the bulk action, and then we can say approve, add, and approve. And that'll match that item out. For more accounting information and accounting courses, visit our website at accountinginstruction.info.